Josh, this is a market that we've been talking about for several months now that has been characterized as extremely tight, that the economy is well, that we have many policymakers saying that we have attained full maximum employment. Does it worry you to see some of these tiny cracks evolving at this stage of our market cycle?
Good morning, Dom. Yeah, it doesn't seem terribly surprising. I mean, we're near peak employment. We're getting some tough numbers out of retailers, Target, Walmart, and more recently, what used to be called Restoration Hardware, kind of issuing some poor guidance. And I feel like those say a lot about where we are in the economy. How much better can it get, considering that a lot of demand was pulled forward, in the last couple of years with stimulus and the like. So I don't think any of this is surprising. And I think these comments about the economy taking a turn just reflects how good things were, not how bad they're going to be.
Josh, oftentimes many traders and investors, and certainly many viewers of our network and other business news outlets, they tend to look towards the technology sector, maybe parts of the media sector, as one of the leaders, right? The leadership group in the overall market, maybe even the economy. It has been certainly that way since the emergence from the great financial crisis. Does it bother you now that it's some of these big tech companies, growth ones, that are the ones who are initially starting to pause hiring or even cut jobs outright?
I don't think it certainly doesn't bother me. I think, it makes sense. I mean, we saw yesterday some guidance from Microsoft that was, at least for a couple of hours, worrisome. And I think the stock ultimately rallied into the close. So I think that it makes sense. I mean, it's, these things go in cycles. And I think, tech certainly led the way for the better part of two or so years. So I think, the next leadership is value. It's perhaps, utilities, which, I think represent an incredible value right here and some recent relative strength. So, I think it's just the way the market works.
So if that's the case, I mean, this value trade has been leadership now for what you can argue is maybe a year or more at this stage since the emergence from the depths of the great the pandemic and whatnot. If you look at that, does it maybe give you some pause, this idea that value and maybe utilities, staples, and certainly energy has run as much as it has already? Is it still a buy, even though we've seen such massive moves higher in some of these energy type stocks and some of these utilities and staples names?
Yeah, sure. I mean, I think to separate it out, I mean, energy obviously so much dependent on the price of crude and natural gas to some degree. I think things like utilities, have a lot of legs in them. I mean, I think that story is a lot more stable, inherently more stable than something like a classic exploration and production company. So, utilities in an environment like this where growth is slowing and we're looking at maybe 2.5% on GDP this year, which has been ratcheted down consistently from the mid threes, and 2% next year, maybe even lower the following year. In that environment, utilities that are growing their bottom line by anywhere from 5 to 6 to 7% a year, somewhat consistently, is a compelling story, and with dividends to back it up, and that visibility, I think investors will come to appreciate more and more.
Do you have a favorite stock pick right now? You do manage money for a living, Josh.
Sure, yeah. So in the Hennessy Gas Utility Fund, we focus on the distribution and transmission of natural gas, utilities and pipelines and some LNG exportation. I would point out National Fuel Gas. It's an integrated natural gas company with upstream assets in the Utica and Marcellus, some midstream assets, and then a traditional gas utility serving, Pennsylvania and New York. So 51 consecutive years of dividend increases. They're a prolific free cash flow generator and looking to take some of that cash and build up the utility side of the business.
And
so I think that's very interesting. And Chesapeake Utilities, 19 years of growth in the dividend, strong rate of change in that dividend, and just a traditional gas utility serving, the Mid-Atlantic and Southeast.
All right. And Josh, before we let you go, we're going to add your voice to the mix here. You heard the comments before as we introed your segment here. Jamie Dimon says an economic hurricane is coming. Elon Musk says he has a super bad feeling about the economy. What do you feel? What's your kind of intuition tell you about where things are headed?
Yeah, my intuition says that, well, certainly you can't have it both ways. You can't say it might be kind of bad or it could be really bad. That's not a statement in my mind. So what I would say is that be a rainstorm, and after all rainstorms comes some sun. So I think the sun rises, mid part of next year. But that's the economy. The market's different. I think the market looks much farther ahead than we do when we talk about the economy. So I think the market traded out, and I think that that's sunshine for as far as the eye can see. I think that we're set up for a good rally here.